We're just Kyle and I are just going to do the DD. That's the most important thing, and we want to explain to you what's going on. We have a bunch of stuff that we really need to discuss in detail, and a lot of this is murky business that's done by the brokers, the market maker, and of course our friends over in Chicago. And I assume you already know who that is. So that's what I want to talk about, and I know there's an elephant in the room that I should probably address, and I'll just do it right now really quickly. I just, I want to get it over with and just be done with it. So I had a message come in from another Twitter follower who I thought were friends or whatever, and there was a weird exchange, and it felt like to me that this person who I thought was my friend or whatever had heard something, or there was some kind of rumor about my background, and then there was some kind of illicitness with me, or some kind of whatever. And I was put in a very awkward position because I felt like this person was trying to convey something. And I'm not going to name names. I promised myself I wouldn't. I'm not going to bring up who these people are, but there's a cabal of these people working and operating together, and that's partly one of the reasons why I'm leaving. I understand that they work together in a faction, and they basically, threaten, blackmail people. In fact, I've seen this since I've been here since month. I don't even know how many months it's been here, but it's been kind of a messed up situation, because what I saw over the last 11 months within the community, within these groups, have it completely blew my mind. I found it impossible to carry on my duties to get Citadel exposed after what I'd seen on Twitter. That's the reason why I'm leaving Twitter. I've seen swearing, I've seen name calling, casual racism, blackmail, threats of assault and battery, sexual humiliation, slut shaming, online reputation ruining, just vile behavior. And it's not because of community, or somebody's trying to weed out people, or trying to make sure that you're okay, or whatever else, or whatever that stuff. No, this is to strip the common dignity that's afforded to each person by God himself, right? It's for control, it's for jealousy, and God knows whatever else. I can't be around that stuff. I just can't. I think that part of the community is absolutely toxic. I don't think it gets anything done. I think it hurts people and harms people. And let me give you two examples that I've seen, right? I want to talk about Mark Cahotes for a sec. Mark Cahotes is a 60-something-year-old guy who comes over here with a plan, and people don't like his plan. Great, right? And the way he was treated, I've heard these phone calls where they've called him these awful names, disgusting names. Mark's a 67-year-old guy who's been in this industry for so long, and people are calling him a CS and a MF. He's a father. He's a husband. He's somebody's child, right? I'm not trying to throw this, I'm not trying to preach a sermon here, but I found that stuff to be kind of repulsive. And I want to finally talk about Lou versus Wall Street. I see a lot of hatred towards this guy, and I see him bringing a lot of value. A lot of you think he's trying to scam apes or this, that, and the other. For Lou, and I believe this in my heart of hearts, this is not a stock play for him. This is a redemption play for him. And some of you have treated him really, really poorly. And he's brought in so much value, different perspectives. He's in the epicenter of the world's financial hub. He has been in this industry, and he knows the back end of how these systems work. And because of something he did years ago or whatever, everyone's just like, fuck this guy, blah, 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 this, that, and the other. I think that stuff is toxic, and I think that will be the things that people remember about. That's what I'll remember. I won't remember all the good things. I'll remember these things, how people get treated poorly. And that's what happened to me. Very same thing. They started to go through my credentials on my school, and something was not right, or something doesn't look right, or this isn't Harvard enough for you. I went to the extension school at Harvard University, and apparently, according to some people, that's not Harvard enough. And they were just trying to embarrass me, trying to make fun of me. I had the same instructors as at the college I did with everybody else, and yet for some reason I have to be publicly shamed and humiliated that I didn't play for the rugby team at HBS. It's just one thing after another. And rather than sit there and have my online reputation ruined, I'm just going to leave. I don't want anything to do with it. If you guys want to police your own, and I advise you should, you guys can deal with it. I can't. I'm going to go do something productive over at LinkedIn. I'm going to set and make an impact there with what I'm doing. But I wanted to address this before it got out of hand. I'm not asking for retribution or vengeance or anything like that. Don't do anything on my behalf. Just watch. Just watch as it happens. And if you have the guts, communicate something back and say, no, this is not appropriate. This is not okay. And one last thing. I am not an ape. I'm a retail investor. Okay. I don't like the moniker. I've never been about that moniker. I'm not an ape. I'm just a regular retail investor that has a ton of money in this thing, like a lot of other people, and that's it. As long as we are very clear on that. And I want to kick this off by introducing Kyle. So I've known Kyle for 20-something years. He was my squad leader in the Marine Corps. He's one of the smartest guys I know. He knows more about this sort of business than anybody I've ever met, including guys that work on Wall Street. He knows all the ins and outs. He's a very, very smart guy. And I've listened to his DD over and over again because he's explained it in a way that I was like, wow, I never thought about that. Oh my God, we're sitting on a gold mine. That is what I'm hoping he will do tonight for you. You will hear his thesis, and I will have, I'm going to defer him and just have him explain everything from A to Z and why this play has so much more potential that we give it credit for. And this is not to make fun of or to bring down somebody else's DD who had limits and stuff. But this is what we have discovered through our own DD and our own analysis. And as soon as Kyle's done with that, I'm going to talk about market manipulation, trading, and go from there. And that's what we're going to do. Kyle, you want to kick it off?
Yeah, well, those are some of my favorite subjects, but just to start by easing off on the overselling here, I'm by no means a professional in this stuff. There are plenty of professionals who probably know way more than me. My background, I day traded for about 5 years, and that doesn't really qualify you to do anything. It takes very little effort to run a couple of scrapes a day. The vast majority of what I do know, I have learned from researching AMC and GME over this last year. I've learned more in this last year about the inner workings of the market and the forces that are working behind the scenes to kind of make these things happen than most people learn in their entire lifetimes. And it's just from doing a lot of reading and digging and things like that. None of what I know would be possible if it wasn't built on the backs of other people who have done even more extensive research and pointed me in the right directions to begin with, and all sorts of things. But that being said, just to kind of put it all together, I got into I was actually in the process of getting out of the market entirely and not really maintaining a position anymore. And I kind of caught at a glance what was going on with GME at the time, and I got into GME as it was climbing up at $40. Discovered AMC had basically the exact same numbers at the same time. I got into AMC at about $5, and then they both spiked in January, and what I ended up watching was the SEC basically, well, it was the entire the market shut down. The New York Stock Exchange pulled the circuit breaker, and then the next thing you know, when the stock is moving again, one of the hedge funds had cleared their position to get out. So they basically allowed the guy to close behind the scenes to exit his trades, and I felt that was unethical, and I started trying to bring people's attention to this and so on. That's kind of how we got Al into it in the first place. But basically, as I was doing my research and learning more and about what was going on, and trying to figure out a lot of what was going on behind the scenes by looking at the data we did have. The whole nature of the beast with this stuff is of course when they're shorting they're not obligated to disclose their short positions. So the best we have at any given time is just a rough estimate of what they're willing to disclose. And then it's a lot of forensic data analysis where we're trying to piece together the numbers that they could potentially have that they're choosing not to expose based on their different options plays, for example, and things like that, which ends up being a lot of going through like text files and data from the SEC and so on. Oh, there we go. Thank you kindly. So back in around March or April, after it was still fairly early on, and we were still trying to figure out what we could do to manage the price of the stock, and Citadel was still figuring out a lot of its tricks. Like, they weren't really routing trades through the dark pool back then. They were literally spending cash on the daily in order to try and force the price down. We went through the battle of 801 at the end of February, and man, that was like some of the most intense trading I'd ever been a part of. But I started trying to figure out in that March-April timeframe what I thought the potential floor for AMC could be. And we based it off of the reported short interest over a period of time versus the amount of stock that they were holding and the number of calls that they were holding for themselves, not writing, but holding open for themselves to potentially make up for a loss of income. And I figured they probably, we were looking at maybe at the time, and it's drastically increased from then on, almost just over double the float in existence in through the use of naked shorting. And I started tallying up the failures to deliver that had run from January 28th up to that point, and then did an estimate of the potential, assuming that we had a certain number of people, there was a certain level of inaccuracy to the data, there was a certain number of people that just they saw $100 and folded, paper handed, and so on, and just based on the number of people remaining and their willingness to hold, I set my floor, and this was again back in April, at about $130,000. I think the actual estimate was 129 something when I did the math. But the big thing is that since then, this whole process has just gone completely off the rails. They've continued to fail to deliver. In fact, I believe October, November just registered. I'd have to go back and look at what I wrote down. They just registered the highest number of failures to deliver for the entire year on AMC, which is, that's absolutely crazy. And of course, every time they do an FTD, what ends up happening is they're creating synthetics, and then those synthetics are repeating every 21 days if they're not being redeemed to the DTCC. So at this point, we're talking potentially, and this is with a huge margin of error that I've calculated this just because, again, we can't really see for certain what's behind the curtain. All we can do is look at the numbers and guess. I had calculated a potential maximum of about 51 billion shares. So even at a 70% margin of error, you're still looking at between 15 and 20 billion shares floating around the market that are a byproduct of, or they're partly these naked shorts and then partly these synthetic shares. that are owed to the DTCC, and for all intents and purposes, for people on our side, they're treated the same way. Is no matter what, these shares have to be paid for. They have to be bought and sold and accounted for, and as they're basically repurchasing each one, they cease to exist, and we shrink back towards reality again. But even with this massive margin of error, we're still talking 10, 20 times the float. It's our choice on how ambitious you want to be, and with numbers up that high, a floor of 130,000 is not. I mean, that's an easy reach. It's no longer this vaunted thing. We could easily, in this whole process here, depending on how long it takes, see share value in excess of $1 million and climbing at its peak. So, when you guys are researching this, I know it's hard to get all the data, and it's hard to parse some of this stuff up. And I know, working with Al, we have posted the majority of our work where we can, and on his YouTube and so on and so forth. But as you're doing the research, be realistic about the number that you think you can achieve. And I'm not talking about, I'll sell it at 100 or 500. These are, if you're selling for less than 100,000, you are absolutely selling yourself short here. And again, this is, just the floor. You want to watch this thing rise up, and then try to sell, near a hypothetical peak. But I think ultimately this, as the cookie crumbles, this is just going to be an absolute disaster. And as we start to see all these other people crash, the banks and everything start to crash, nobody's going to know which way is up. It's just going to be panic in the streets and so on. And we already saw what was it, yesterday or the day before, Citadel restrict their clients' ability to withdraw their own money, which I saw that and immediately started laughing so hard, because now these poor schmucks that have bought into this for so long, they can't escape. They're locked in. They're gonna ride this thing all the way to the bottom, and Citadel just has basically guaranteed that all of these people who invested with them, they're all going to basically participate in this massive flow of money from their hands into our hands. And there's no real better way of saying it than that.
Kyle, real quick, I got a message saying something about cumulatives of the FTDs. Now, you had an argument with somebody, right, about that?
Yeah. So the basic idea is that he was saying that there are cumulative counts of the FTDs, but that's true, but also no, it isn't true. There are some that are cumulative, but they settle within a 21-day range, and they're posted in a 2-week range. So some are carrying across the 2-week range, and some are being settled at that 21-day point. So the margin of error basically accounts for that stuff. There is no FTD that, say, cooked off in January and has been sitting there unfilled through December. That's not how it works, and that's the whole point of how they create synthetics. The synthetics are to fulfill each of those failures to deliver with what is essentially amounting to a financial IOU, and they can't just leave an FTD open for the interim. So the longest it could possibly flow through is on, as it's posted on a 2-week basis, and the FTDs are actually being generated on a 1-week basis, and the SEC data is posted in the raw data template on a biweekly basis. So then you count 21 days from the initial inception, and so it would have flowed through one, and dropped off the other, but we don't have any means to separate that and access it. Like the systems we're using to parse the data have nowhere near the amount of inputs and data access that would be required for us to even figure that out. So there's, unless we're doing it from inside an SEC computer that's dedicated to monitoring that stuff, we can't do anything with that degree of accuracy. We can just sort of acknowledge that, yeah, there are probably some cases that went through and this is inaccurate, and we bump up the potential range of accuracy. So all we can do, like when we did our data, we set a theoretical maximum and said this is the maximum possible. If every single one is right, this is the maximum possible number. And I think we came up with 51 billion. And so that means every single one FTD'd at the exact right time, and there were no flow throughs and everything like that. So that's not really a realistic number. We cut it down, and so on and so on. And so each potential level of a lack of accuracy contributes to that margin of error. But again, even with the 70% margin of error, which is even, that's buffered, that's way bigger than it needs to be, we were still looking at like 17 billion shares created. So, it's whether or not the FTDs are actually flowing through, it's really irrelevant. That those numbers, those gigantic numbers, are still there. The 10 times the float, 20 times the float, they're still there.
So I appreciate that, Kyle. You got anything else you want to throw in there before I start kicking off the meat and potatoes?
No, I mean that's the manipulation side of this thing. That's stuff that really gets my goat on this.
Yeah.
One thing I will offer, being a big crypto guy, and for everybody who kind of likes eyeballing the crypto market to see what's going on, there are really good markers within the crypto market for when somebody is getting margin called. But they're very, very evident in generally, and they're going to be in one of the top two, either Bitcoin or Ethereum. If you want to know what you're looking for a very sudden drop over a large number of pips. So a couple of days ago, the crypto markets dropped, but like Ethereum came down at a very, very gradual rate. It was a very, very light slope, and ultimately, that's nobody was getting there was no evidence of somebody sell an institutional investor liquidating crypto in order to make a margin call, even though everybody was like, oh, crypto dropped, maybe there's a margin call. Then I went over and looked at the Bitcoin charts, and there were these very pronounced drops, and that was very, very clear evidence of this is an institutional sell-off, this is an institutional sell-off, this is an institutional sell-off. So we know, that there were this many people who liquidated crypto holdings in order to try and cover whatever they had going on. So that's a really good guideline to follow if you're interested, because a lot of the other stuff, when these guys get margin called, we have absolutely no indication of what action is taking place in order to margin call them, because generally, like if they sell some shares or fill, they cover some shorts, we don't even see the action on it until like 2 days later, because it's a T+2 settlement date still, in spite of all of the action that's going on. We have to wait 2 days to see what the results of a margin call in the market would be. We don't have to do that with crypto. So crypto works really well as a canary in a coal mine, as long as you know the right indications of what to look for. It's not just going to be an up and down flow. There's a natural rhythm to the crypto market in general. It's based off of when the miners choose to dump their holdings. So there's sort of a natural up and down flow anyway. But those sudden precipitous drops, the large pip drops, those are almost always an institutional investor selling off, and generally selling off because they don't have a choice. So hopefully that helps some people.
Thanks, Kyle.
Mm-hmm.
All right, so let's talk about selling. I want to talk about some of the things that have been on my periphery for the last couple of weeks, actually much longer, and I wanted to bring up a couple of the things that I've seen and observed and people talking about. There's one thing I want you guys to understand right now, okay? The institutions that hold AMC and GME are doing analysis on all of our social media. And they're doing this because they want to get an understanding of what our sell point is. It became very early in the conversation. People kept putting up, these numbers on Reddit. It started with Reddit, really. And then institutions started to scan, look at our sentiment, what's going on within Ape Nation. We are being analyzed by data AI, and they're giving them numbers. They're watching us to see what numbers we're selling at or we're going to sell at. And people have talked about 15,000 bracketing and this, that, and the other, which I think is just absolutely crazy. I think it slows down the squeeze. I think it's they're going to heel drag. Obviously, that just basically means they're going to take their time fulfilling the order. And I think it's also pretty selfish. It's like if you sell too early, there are guys today. Like somebody messaged me today. I only have 43 shares. What do I do? Do you think I'm still going to be able to make life-changing money? Let me tell you, friend, I hate hitting messages like that because it's like I know I'm going to hold. I'm going to keep my own, and I'm going to be able to hold until whenever. But I've always gone into this fight knowing, after what Kyle said and what I've seen in terms of data and how it's manipulated, that 100,000, is just a scratch. I think we can get there. I think it's doable if we all hold. And I'll give you the reason why. And I'll give you a very, very good reason right now. It's the spread of when you sell, okay? And today, it's ironic because I wrote this draft up a few days ago, and I talked about how when you are going to sell your shares, the broker has a spread. You might want to sell at 15,000. You might only get 800, 900, 1,000, whatever. They could screw you like that. So I started asking myself, well, how do I avoid doing that? Should I call in the order? I'm going to. I might do that. I don't know, depending on the day. But I'm telling you right now, if you're not observant about your sell orders, you're going to get taken. And I do mean that by the spread, because even if you sold at like 15,000, you're not going to, like I said, you're not going to get 15 grand. So what I would suggest you do, wait for the high numbers, really high numbers. If nobody sells, that price is going to go higher. And what do you think will happen if we reach, $50,000, $60,000, and there is no more shorts? There's nobody trying to drop the price down. It's just us, the holders, and the institutions going somewhere, and that place is the moon. It's going to rise. Nobody's going to sell. If they know the sentiment across all of our social media is like $1 million, believe me, they're going to hold, and we're all going to make a boatload more if you do that. Because the institutions, remember how I said there are 52 ETFs that are holding this company, right? That's like 32 million shares. That's a massive market move if they decide to sell early because they're afraid. Okay? So I want you to keep stuff like that in mind. There are people that are holding massive amounts of shares that are going to try to drop early, and they're going to freak you out with these bulk sell drops, right? Now let's talk about this error messaging that I said on the video. So the whole name of the game for the brokers is to get you to sell on a market level, right? They want you to put in market orders. Why? Because then they can scalp you, and it's legal tender. You can put in that 15K, and they can give you 800 a share, and they pocket the rest, and there's no one that can do anything about it. So instead of doing that, right, what you do is you put a limit order in right before you want to sell, right? Whatever that number is. And if it exceeds it, if it goes above that number, and let's say 30 seconds to a minute, and it's going even higher than that, cancel it. Cancel it right then and there. because you're going to get an error message or some kind of, transaction in progress or some kind of, fuckery or treachery rather. I can see them doing stuff like that because this is huge payday for them, right? So going back to the 32 million, there's 52 ETFs. The largest holder is IWF, which is the Russell, right? There's a company called SFYF that has the largest allocation. All right. I want you guys to be aware of this stuff because you're going to see dramatic drops. And I'm talking like breathtaking drops where you're going to try to catch that falling knife. Don't do it. Hold. You're going to see it. It's going to panic you. You have to hold. I made a video called Trade Trauma. It's a psychology behind somebody who's been trading for a while that is compelled to grab that falling knife, right? And it's because of past experiences, not getting what you want at that price or whatever, right? That stuff can be avoided in large scale if we all hold. In fact, I would say 90% of the problems that we have as a community when it comes to selling this stock, when it comes down to it, can be avoided by holding. Just holding. If you hold to an astronomical number, even if they try to screw you over at $200,000 or some crazy number, you're still going to make a massive amount, more than enough for a lifetime, in my opinion. So that's why I always urge people, hey, get up there, get up there, get up there. Don't sell, don't sell. But the problem inherently with the human heart is they want to get rich quick, right? I mean, that's the thing. You want that money right now. You've waited a year. You don't want to wait any longer. You just want to get your money and go, right? Hey, I understand that. But you're leaving more on the table than you could possibly imagine, right? It really is the case. There's going to be trading halts, okay? 2 days to 30 days, maybe even longer, all right? I want you to be aware of that. It's just not going to move. And that's your day off. Take a break. Go eat an Eskimo pie, whatever. Just stay away from the stock, get your mind right, and come back another day. If it's your day to sell, in other words, if you're going to sell a certain day, take the day off from work. If you hit a price where you think it's going to happen the next day or two, take those days off from work, execute the transaction, execute the trade, do it yourself, okay? Or call them and ask for the spread. If you're going to call in the order, like calling Fidelity, and you're going to be like, hey, I want to know what the spread is. And if it's some crazy number, don't even bother selling it. Don't even bother, because they're going to scalp you. They're absolutely going to scalp you. So what you do is you wait a little bit longer, wait till that spread comes down. You can keep that guy on the phone if you need to. And as soon as the thing comes down a little bit further, boom, you execute the transaction, just like that. All right? Let's see. I have so much to talk about. There is an issue also with the authoritative data sources. And I'm going to just reverberate for everybody so they understand. The data sources that on Bloomberg, maybe about 2-3 weeks ago, I started noticing we lost our negative beta and we had a positive beta. But when I do it on Excel, when I do a regression, it's like -9, -10 in that range. So what's happening here? I don't know if they're levering up or not levering up. I don't know. They're doing something on Bloomberg where they're giving us a positive beta. That's bullshit. That's bad data. Okay. So I'm going to assume the market maker, Citadel, is giving compromised data through all of its channels. So whether it be Ortex or through New York Stock Exchange, whoever, I believe. Hold on a second. Qualify for instance. So
I can interject on that.
Go ahead.
There's about 5 different ways that you can calculate beta, and they may have just switched from the long-term method of calculating beta to the instantaneous method of calculating beta, because the instantaneous, especially like with the last 2 days that we've had, would show a positive relationship to the underlying market as opposed to the negative. The negative beta that we carry in the long term is the result of calculating the beta against the short interest. So that's how it produces the negative beta in the first place. But it's if they have changed their methodology, which, I mean, ultimately it would be somebody like Citadel that would motivate them to change the methodology in the first place. They changed from a longer window to a shorter window. That would show you that would provide a net positive beta. But in this case, we've done the DD. We know it's there. We know it's consistently returning a -8, -9. GME was returning a -25. These things that we, no matter how they choose to manipulate that, we know the real addition. So that just run with that as you need to.
Right. So one of the other things is these glitches we keep seeing, right? Let me tell you something. I wrote that article, and we had somebody from I think it was Ireland that says, no, it doesn't make any sense. You guys have 4 SUVs on Mars, but you guys keep having computer glitches all over the internet or all over these stocks. Why is that, I wonder? And he's tacitly inferring to the fact that the data is bad, and he sees the data. So when you see on level 2s, you're going to probably see what's called spoofing the tape. It's when they give you bad data. You're going to see these dramatic prices. Like one day you'll see like a $16 million share order, right? And once it hits that line to be sold at a certain price, the thing will just disappear. Okay, expect that to happen, and what they're trying to do is get you to sell. The entire game for them can be summed up in 2 sentences. They want you to sell early, and they want you to be fearful. Right? The sooner they can execute, get you guys out of the way, the better, and everything's going to be great for them. They want to get you out of there fast, and they're going to fear you into doing it, whether through government, through false news, fake news, if you will, including glitches and market manipulation, right? One of the things that they love to do is the thing called bulk sell drop. Now, listen to this. We talked about paper hands, right? We talked about those people that are going to sell early. What they're going to do is they're going to consolidate all those orders, and they're going to park them. They're going to fulfill the orders. So it looks like, oh, their orders are getting filled. Wonderful. And then all the institutions that are going to be selling, whoever, and they park them all on. And then all of a sudden, there's like a $6 million order, right? It's parked. And then out of the blue, they're going to drop it, and they're going to report it to the New York Stock Exchange. And the price plummets, and then you are trying to catch a knife. Do not fall for that. Do not fall for that. That is something that they do explicitly to get in your head to make you fearful and make you sell. All right? That's the bulk sell drop. That's the parking. It's also known as the ring cycle. Hold on for a sec, guys. I got to just take a drink. Okay. Let's talk about the halts really quick. So one of the things that people do is during a parabolic activity, during a time where this thing is really just moving fast, really hard, and it's going, and it's going, and it's going, and they have a trade halt, and let's say it's a 5-minute trade halt, right? That's when you should walk away from the computer, all right? If they have a trade halt, walk away from the computer, because what happens is there's this anxiety that builds up. It's this I don't know how you want to describe it, but you're thinking, oh, that's it, that's the end of the squeeze. You're gonna lose everything if you don't sell right then and there. And you put a market order in, or you put a limit order in, it's not going to get filled because they hold on to it. It's like a kill box. The longer they make you wait, the more anxiety-ridden you get, and then boom, that's it. They're going to make you sell. That's the psychology behind it. It's behavioral finance. The other thing that they do is during sell orders, this thing called heel dragging. It's where the hedge funds, the market maker, the New York Stock Exchange, whoever, they wait like a few days, maybe just to fill your order. In other words, they fill the order, but they don't really fill the order. And they can go anywhere from 2 days to 30 days. And I found this out through a friend of mine. Depending on the price point, it's even worse for those who are bracketing, right? So they can't hold on forever. They can't hold out forever. They eventually start buying again. So in other words, if you put an order in and it doesn't buy, don't get discouraged. They will start buying. You haven't lost your chance. So don't sell low. If you sell at $1 million or above, like I said, you'll be fine. You'll make great money. Everybody makes money on this. Everybody eats, right? But heel dragging is something that they are notorious for doing, because all of a sudden you put your sell order and it's all done. You're all very happy and ready to go, and all of a sudden nobody's buying. Whoa, what's going on here? That's called heel dragging. Heel dragging is another anxiety driver. It makes you anxious. They do that just to fuck with you, basically. So don't get sucked up into that. Of course, we talked about emotional manipulation before. Let's talk about stock fatigue syndrome, all right? This is caused it's a mental exhaustion. It's caused by hypervigilancy of stock watching. It's when you're watching the stock all the time. You're on this emotional roller coaster, and it's a peculiar kind of tiredness. It's a mental tiredness, and the feeling one gets, like when I call, if you're dragging out a divorce, is you just want to get it over with, right? So a lot of times people will see that 15,000 mark. Oh, is this enough for me? Is that going to be enough? Yeah, it's enough for me. I just want to get it over with. And they say exactly that. I just want to get it over with. Don't be that guy. Don't be that guy. Okay? Because you're getting this tacit. I'm giving you this knowledge so you know when to recognize these signs. It's one of the biggest threats, in my opinion. The apes are going to get so tired that they sell early just to get it over with. I think every ape should be concerned about that. Every retail investor should be concerned about this. It's very real, and you should prepare for it. And it's just as bad as excuse me, anticipatory anxiety, and that's another real thing. But let's talk about trade trauma. Let's talk about what happened with DWAC a couple of weeks ago. How they were going up and down, and we were at people trying to get out of it, and they couldn't. And they end up selling really low. They started freaking out. Lo and behold, you have a trauma now because you got shafted out of money. The market maker won. There's a psychological impact. There's a trauma. There's a pain there that is going to be with you for every other time that you're trading if this happens, right? It's part of the fight or flight response in our body. The hippocampus, I believe, is what it's called. And it's almost like a traumatic event, like a war wound in a sense, right? And it produces this fight or flight response, and you have to know that, because if you feel it during a trading session where you're ready to sell or you're just watching it, and you start freaking out or something, because let me tell you, you're going to see those numbers. You're going to see your numbers in the millions, your brokerage account in the millions, and you're going to be like, holy shit, what's going on? And you're going to have anxiety, right? It's a thrill. It's an emotional thrill, and there's this euphoria. It's an ecstasy, if you will. It's like sex almost. It's like you this close to getting it all, and you start thinking about the trauma. Should I get out now? You start recalling things, and you start to obsess over them. It's like price rise anxiety is what I call it. It's something that's different than normal psychology. It's on the OCD spectrum, because what happens is your